Okay, today I want to talk about the myth out there that you have to set up a holding corporation to own investments in it. And I think it arises because on the news, everyone's talking about these investment holding corporations that the government is going after, or they talk to their friends who have a holding corporation that owns a lot of investments. So they think that if they want to purchase all these investments, they have to set up a holding corporation first. And I want to talk about why that might not be the smartest idea. So the reason that you see these holding corporations with all these investments in it is because what happens is there's going to be an operating company also too as well. So there's going to be a company that's actually out there selling goods, selling widgets, providing services, doing whatever, and it's going to be earning all this money. But the tax rate on that income that it's earning from the actual active business, so from the active, selling sweaters on Amazon, that's active business, the tax rate on that is only going to be around 12 or 10%. So it's a very low tax rate. So what happens is that these corporations, they get a low tax rate initially, so they have more cash in the corporation than if you were to do that exact same activity but not earn it through a corporation. If you're to earn it personally, you're going to be paying tax on that same income at around a 35 to 45% tax rate. So you're going to have less money left over to invest, whereas a corporation is going to have more money left over after paying taxes to invest. So the operating company is then going to transfer that money to the holding corporation, and that holding corporation is going to purchase investments. So that's called tax deferral. And the whole purpose of it is just for those holding corporations they can purchase more investments than a person could if they earned that same sort of source of income personally. And so that's why these holding corporations are able to gain so much investments in them. But the actual tax rate on investment income is actually slightly lower in Alberta and in most provinces. It's slightly lower to earn that investment income personally than it is to earn that investment income through a holding corporation. So the taxes are actually slightly lower for you to earn that investment income personally. And that investment income I reference to is things like capital gains, dividends, and interest. So if you want to go out there and buy shares of Apple, that's going to pay you dividends, so dividend income. Or if you sell it, you're going to have a capital gain. Or if you buy bonds, that's going to be interest. So it's actually lower tax rates to earn that type of investment income personally rather than a holding corporation. So unless you're going to go out there and start an operating company and sell widgets and then use the after-tax money to purchase investments at a holding corporation, it's actually not more beneficial. If you're just starting out, just from ground zero, and you're like, I want to get a investment portfolio and I want to buy shares of Amazon because I love Amazon, you're actually not better off starting a holding corporation to purchase those investments. What's going to happen is you're going to have to pay additional money to incorporate. So you're going to have to pay lawyer fees, accounting fees. That's going to be yearly fees that you're going to have to pay, and you're going to have to pay higher taxes on that investment income. So just if you're thinking about starting an investment portfolio, just do it personally. It's going to save you taxes and money. And again, the only way that it really makes sense is if you have a holding corporation. If you have an operating company already, like that's doing something else that is earning money, paying this small business tax rate that's very low, and then it has a whole bunch of money left over to invest, you can use that tax deferral to purchase more investments. But if you're just starting it from ground zero, just don't incorporate.